How do you invest in the stock market or stocks, especially at a time like this when everybody is fearful of the stock market and the stock market keeps hitting its all-time high day after day after day? If you're a new investor and you're trying to get into the stock market right now, it can be very challenging to navigate the stock market. And if you're not very careful, you could get burned. You could lose a lot of money. And that is why in this video, I'll be giving you guys a couple tips for beginners that can help you to better navigate the stock market so that you don't get burned and you don't completely lose all your money. Now, watching this video, you probably won't become an expert like Warren Buffett, for example, but this video will help you because I'm going to give you guys a few tips that I've used and they've worked really well for me. Now, one of the very first tips that I can give you as a stock market beginner, and actually before I give you all these tips, just a very quick reminder here. Welcome back to the channel if you're already a subscriber, and if not, if you're seeing me for the first time, my name is Ian, and on this channel I talk a lot about ways to make money, ways to save money, ways to invest your money, the stock market, of course, side businesses, credit cards, banking apps, and everything related to personal finance. So if you like these videos and these types of topics, be sure to give this video a thumbs up. I'll really appreciate it. And also consider subscribing to the channel and turning on all the notifications. And that way you'll never miss an update when I post a new video on this channel. Now, as a stock market beginner, one of the first things that you need to do is to get your emotions in check. And you want to be able to control your emotions. And this is actually very important because a lot of losses in the stock market have been caused by emotions and people just not being able to control themselves. So for instance, most people will get super excited when their stocks go up or when whatever stock or whatever is in their portfolio starts going up because they get this good feeling when they see the price of that stock increasing and they realize that they're making money, and so they continue to buy into the stocks. However, what this does is that it increases the average cost of those stocks. Now, of course, you want to be happy when the value of your stocks keeps increasing, but if you're trying to make money in the stock market, you should be one of those investors who actually gets happy when the opposite happens. So you want to be very happy when your stocks start going down, and the reason for this is because if the stocks go down, then you can purchase them at a lower cost, and that way the profit will be more. The money that you invest into this investment portfolio can compound a lot more, and you'll just earn a lot more in returns on your investment. Now, I'm also saying this to prepare you for a stock market crash because a lot of people are very fearful of the stock market or a stock market crash, but the stock market has crashed before. It's actually not something new. So the stock market has crashed multiple times before, and every single time that the stock market has previously crashed, no matter how bad it was, even though a lot of people thought it was the end of the world for stocks and companies or the economy, the stock market has always bounced back, and every time it came back, it surpassed the levels or highs which it previously had obtained. So if there's a stock market crash or stocks go down in value by a lot, this is actually a very good thing because it's giving you a very good opportunity to buy in to your stocks at a lower cost. And also this way you get more value for your investments if you want to think about it that way. And that way you can profit a lot more when the stock market goes up in value. Now, if you're familiar with Warren Buffett, he has this popular quote where he says, "Be greedy when others are fearful and fearful when others are greedy." And this is kind of like the same thing because people are greedy when the stock market is going up in a bull market. Like right now, for example, they'll continue purchasing stocks and they'll continue making money. But when and if the stock market falls off, then they may go crazy, seeing the value of their investments plummet. However, I want you guys to see that as an opportunity and not to be so fearful if the stock market goes all the way down. And also a very good example of this was last year around this time in April when the virus came around and the stock market went all the way down and a lot of people were fearful and they all thought that it was going to be the end of the world. But people who bought into stocks, and just about any stocks getting into the stock market at this time last year, if you bought in, you're probably at least 50% up on those investments, if not by a lot more. So you need to understand that the stock market will go up, there will be a bull market, but then the stock market will also go down and may possibly crash, or whenever it crashes, it's not the end of the world. It's actually an opportunity for you to buy in and then make more money. So the main thing here is to buy low and sell high, and that's how you're going to make a lot of money in the stock market. However, if you look at the average investor right now, they actually do this in the opposite way. They purchase stocks high in a bull market and then they end up selling low because usually they pour all their money in when the stock market has a bull run. Now, the second tip that I can give to you guys today is to invest in things that you know a lot about. Now, you may be watching and you may be saying, Ian, I don't know a lot about the stock market and how this stuff works, but you probably know a lot more about a particular industry than anyone else. So for example, if you have a 12-year-old, right? And let's say this 12-year-old likes candy. They probably know a lot more about candy than you do. This 12-year-old probably has a better idea of what types of candy or what companies sell the best candy or will sell more candy. So in a sense, they're actually an expert in the candy business. So similarly, if you're in another field, you probably know a lot more about that field and the companies in that field and the products in that field than me and a lot of other people. So you can actually invest in things that you know are actually going to grow. So if you're into video games, for example, then you have an advantage because you know what video games sell a lot. You know what video games other gamers are waiting on to be released, and you know the companies behind these games. And so you can tell which company is most likely going to be profitable in that niche market. Now, this is not some new concept, guys. This is actually one of the very same strategies that Warren Buffett, the famous investor, uses. And this is why Warren Buffett actually picks stocks in industries or niches that he actually spends a lot of his time researching and getting to know. So for example, Warren Buffett invests into auto companies or insurance companies, and he has a lot of knowledge on how insurance companies work. And so he can take advantage of investing in these companies because he can most likely tell when they're going to be profitable or when they're more profitable, and also when they're going to be less profitable, which helps him to understand when he should buy into these insurance companies and also when he should sell. Now, this is also the meaning behind this other very popular quote, and I think it's by Peter Lynch, where he says, "Know what you own and know why you own it." So maybe you know a lot about some particular niche market or product or industry, and you have maybe a lot of experience and information on that particular niche market. And so you can invest and you will make a lot more money investing in that particular niche market than if you were to invest in something else that is popular or something else that everyone is getting involved in right now. So the main point here is to know what you invest in and know why you invest in it. Now, the next tip is, and actually this should have been the first on this list, but this is in no particular order, and this is to learn about the stock market and learn about investing and how to invest before you actually start. So quick example, right? Let's say you know nothing about the game of chess, but you go and you visit your very good friend and he's an expert at playing chess, and he looks at you and he says, "Hey, let's play a game of chess, but not for fun. I want you to put $1,000 down, and I'm going to put $1,000 down, and whoever wins this game is going to take that $2,000. Now, would you, with no experience, knowing nothing about chess, just go and randomly put that $1,000 down and play against somebody who is a pro at that game? The answer is no. Most likely you wouldn't risk it. You'd probably reply and say, "Hey, I don't know anything about chess, so no, I can't risk $1,000 on something I know nothing about." And that's the same thing with the stock market. A lot of people just grab some money, or sometimes they save this money. They have to work very hard to save this money, and they have to save this money over weeks and months, and then they just put this money in the stock market, and they do so without actually knowing anything about the stock market, and you don't want to be this person. This is what I call gambling with stocks. Now, this isn't a comprehensive course on investing in stocks by any means, but just a few things that you at least at the very minimum need to know. So read a book or just ask someone, and some additional things that you need to know, or very basic things that you need to know, are like PE ratio, which is a metric of how much a stock costs and how much the stock is actually profiting you. And some other things that you want to know are stop market orders, limit orders, stop orders, and some apps that you use to invest will actually tell you what these things are. So for example, I talk about WEBULL a lot, where you can get 2 free stocks, link down below. If you're using the WEBULL app that I recommend, it has all the different order types, and there is a small question mark beside them, and you can actually click or press it, and it will give you a short description of what that order means or what it will do for you. Now, some other things that you definitely need to learn or to know before you start investing are some of the more popular investment strategies. So for example, there is value investing, there is the dividend strategy, you have dollar cost averaging, and also at the very minimum, you need to know the history of any investment strategy or most of the investment strategies, and that way you can actually understand how these investment strategies performed in the past decade, the past 2 decades, the past 3 decades, and that will give you a very good idea of how much returns you can expect. Now, this way, you're not just gambling your money in the stock market. You actually know what strategy you're using, you know what you're investing in, you know why you're investing in it, and you have an idea of how and when you'll get returns on your investment. Now, the next thing that you need to do when you're investing in the stock market as a beginner is to learn to ignore the minute. Now, what this means is that it means you don't get yourself caught up in the day-to-day volatility in the stock market. So for instance, if you look at a particular stock right now, or a fund or ETF on any day, it's going to have a lot of swings. It's going to have ups and downs. If you keep doing this every single day, it's probably going to trigger you to either do impulsive trading or impulsive panicking, where you start getting fearful and you're pulling your money out at the wrong time, or you could even buy in too much at the wrong time. And this also goes back to learning the different types of investment strategies, because this could be good if you're a day trader, which I don't recommend if you're a newbie and you're just getting involved with stocks. And so if you're not a day trader, then you really don't have any reason checking in with the stock market or a particular stock every single hour or every couple of hours every day. What you should do instead is to ignore the minute and look at the long-term picture, and look at not the hours or days or even the weeks, but look at the months and the years, and then you'll actually see that even though there are fluctuations in the stock market and the stocks and funds that you're investing in, every single day, every single hour, you'll be able to see the actual pattern of your investments, whether they're going up or they're going down. Now, the next step, and this is a very important one, is to learn the cycles of the stock market. And I'm going to show you guys something right now. Now, as you can see here, this is a cycle of the stock market. And as you can see, there is the bottom, there's the early bull stage, there's the middle to late bull, there's also a top or the peak, and then you have the bear cycle on the opposite side. Now, if you look below, you'll see a key, and this has the different industries and where they actually fit into the cycle. So for instance, in the middle of a bull run, technology and capital goods usually do very well. That's when those stocks do very well. And at the top or at the peak, you have energy, precious metals, healthcare, and consumer non-cyclicals. Now, if you know your stock market cycle, you will actually be able to look at the stock market. You will see which stocks or industries are going or doing very well, and that will give you an idea of where you are in the cycle and what's to come very soon in the future. Now, if you look at the middle recession or a late bear, you'll realize that number 4 and number 2 do very well, and this is financials and consumer cyclicals. And this is because no matter what happens, if the economy goes all the way down, if the market goes all the way down, people still need financial services. People will still need to use the bank and banking services, and so people still need to purchase toothpaste and soap and other consumer goods. And this is why these stocks will do very well as opposed to every other stocks or every other industries at this particular time in the stock market cycle. So you definitely want to learn the stock market cycle, or at least look at it and understand what it means. And then that way you can get an idea of where you are in the cycle right now. And that will give you an idea of what stocks or what industries will be performing best next. And that way you can get in and you can make a lot more money. So these are some tips that I think will help you if you are new to the stock market. And this way you can make a lot of money and you won't lose all your money. I hope you guys like this video. If so, give this video a thumbs up. I'll really appreciate it. And also consider subscribing to the channel and turning on all the notifications. And that way you'll get the updates every day when I post a new video here. Now, I'm also leaving a link down below in the description to WEBULL, where you can get involved in stocks and investing. And that app is free for you to download and use. If you sign up with the link below and invest just $100 in your investment portfolio, you'll receive 2 free stocks, which can be any random stocks, and they can be worth up to $1,600. So as always, thanks for watching, and I'll see you guys tomorrow in the next one.